Our next guest is someone where you got to be in the market to play, and it's a terse single sentence. Stay defensive, own really good companies, and have a 5-year time frame. And it's great to talk to Ted Oakley here on a bull market day. NASDAQ up 0.8%. Again, he's an institution in Austin, Texas. Our other idea today on the show has been Martin guitars. and the reason you live in Austin, folks, is to go to Austin City Limits and see Merle Haggard 7, 8, 9 times that he's been there. Record holder, help me make it through December. I hope we make, what is it like living in Austin, sitting at Austin City Limits, listening 15 feet away to Merle Haggard? What is that like?
Well, it's great, Tom. We have a lot of great music there. This past year I saw Diana Ross. I mean, you can get close to people there, and that's a great place to watch music. That particular Moody Coliseum, the 018 at Austin City Limits is fantastic.
The boom market, and you've been part of this. You've done a huge amount with Maria Bartiromo. Can I say it's Maria's 25th wedding anniversary today?
Oh, very
Maria,
good. Really?
She invented the chat in New York Wall Street. Our regards to Maria Bartiromo today on 25th anniversary. Ted Oakley, you're someone that invests for long term. How do you rationalize the big tech juggernaut?
Well, Tom, what happens is we have this concentration now that it's actually more than it was in 99, 2000. And we own a lot of those companies, but we haven't bought them in the last couple of years. They just didn't meet our valuation levels. We still own them. But that's the problem today. If you start new money out today and you look at these companies, it's very hard for you to have to. If you think about NVIDIA has beaten the contribution-wise the other 495 stocks this year. So you could say I'll just buy NVIDIA and some treasuries and go to the house, but that's hard to do when you're handling other people's money. And so I think that's the problem now, is that it's got a bit extended, and it wouldn't be something we would want to tap into at this level, I don't think.
So how do you look at valuation these days? When you screen, what's your valuation screen look like?
Well, we screen about 250 companies, Paul, and we look for a number of things, but we look for lower debt. We look for an earnings forecast over the next 5 years, and basically, obviously, bring it back for inflation. And then we try to buy below that number if we can. We don't have many companies that hit the screen today, though. That's the problem. We do have, we have some consumer staples, we have some energy, different things, but it's hard. It's harder with the big techs for us.
A lot of the tech bulls will say these companies are earning themselves into their multiples. You take a look at like NVIDIA. I mean, it's more than quadrupled its profitability in the last few years. And if you look at the PE, it's like, it's 75 times trailing, but 30 times forward or something for a 30% grower. So it's just the growth is kind of there to support it. And that's different than 99, because I didn't have any earnings for the companies I took public in 1999. But I still
that's true. But a lot of them did have earnings too. I mean, they were good companies. They were making money. They were just overpriced. And I've looked a lot. I'd like to own the company that will be able to take AI and ferret out the misinformation. Mm-hmm. Now, that would be a company to find if you could, because that's probably the type of company you want to own after the fact.
So, go ahead, Paul.
I was just going to say, so how do you think about it?
I'm trying to get my first buy order in, coming out of triple leveraged all cash.
Exactly.
Excuse me.
How do you think about this AI thing? You've seen the growth of the birth and growth of the internet before. You've seen just technology over your 30, 40-year career. How do you think about AI here?
Well, I think it's a lot like the internet, except that you never know what the other side after 5 or 6 years will look like. It will be important, and it will be used a lot, but it probably won't be used in the manner that people think right now, because they never can, you can't figure out what the future is and how you're going to use something to get it, and you can use it in day-to-day action, and that's what I think you'll end up doing.
Okay, so you and Michael Dell, you're on Research Boulevard in Austin, Texas, at the Costco. You run into Michael Dell. You guys are old friends. What are the two of you talking about the New York Stock Exchange is going to move and be the Dallas Michael Dell Stock Exchange? Are you kidding me? This is un-American.
Well, it is interesting, Tom. And I guess it must have affected Michael Dell because I think he's going to sell $3 billion worth this year. He just came out. I think he came out in the news. But I suppose people are looking at it and thinking maybe we should have another place where you do business as opposed to just the New York Stock Exchange. And I don't really, since I'm not a member of the exchange, I can't comment on it. But that's the way I see it, at least from that standpoint.
So, Ted, what are some of the sectors that you guys like these days? I don't know, either from an earnings growth perspective, a strength of balance sheet. What are some of the sectors that you guys are looking at today? Because it's kind of tough out there if you don't own some of these big tech names.
Well, I'll give you an example. We own Microsoft for 15 years.
Okay.
And so, we own Apple, we own Google. But the only one of those group we think is a buy now is Google. But if you look at some standbys we've had for years, MasterCard, Visa, and then the new things we bought is consumer staples. In other words, we're looking at Kimberly-Clark, Coca-Cola, things that probably have been affected by the weight drugs. They think they're not going to buy them. And we own energy, when I say energy, we own the pipelines. We like the cash flow. We own healthcare. Elevance we just bought in the last 3 months. But there's things to own. It's just that you have to be picky.
How prosaic. Kimberly-Clark, PE of 17, estimated PE maybe around the same level, 41,000 people. Of course, he's got to buy a company in Texas.
No, of course.
Dallas.
Dallas.
Texas. How boring. Does their management have free cash flow religion? Do they have use of cash religion?
Well, what happens on Kimberly, this is what we think will happen at least. We think that two things are going to happen. You're going to end up with people going back to the staples side because the economy probably is getting weaker than people think. And those kinds of companies will continue to do well, we think, during that period. And Kimberly, again, a lot of those consumer staples, Tom, have come down in price. We just feel like we'll get a move on them.
Okay, I got one final question. It's critical. Things are so screwed up. Oklahoma and the Longhorns are moving to the SEC, and Texas Tech is going to the Big 12 so they can play Cincinnati. It's nuts.
I don't know if it's crazy. I don't know. I think the whole state
Nobody
of Texas...
wants to play Texas Tech because they always beat them. They're really quite good. I don't get it.
You have to have Texas, Oklahoma.
Can we bring back the Cotton Bowl Thanksgiving morning? The Aggies versus the Longhorns. Yeah. Can you fix that, Ted?
Well, it's going to be played again this year. I think it's going to be played at A&M, and I have to be careful because my wife has been employed by University of Texas for a long time. So I have to be on her side, at least even though I didn't go to school there.
The marriage survived Texas Tech in Texas?
It survived, but it had its moments.
Okay, we'll leave it there and not go further. Ted Oakley, thank you so much. Oxbow Advisors of Austin, Texas. And just a joy.
Hello, everyone. I just want to say, if you like this video and you want to see more of this type of information, because we really try to get the information that you don't see from anybody else, then be sure and click on subscribe, and you'll see more of what we do here at Oxbow.